everyone. I'm severely embarrassed now. I do need notes. They have an app for that. And one of the reasons I need notes is last year I went off script. I saw the looks on the faces of my first line as I did that. And this app will try and keep me on script. It's a pleasure to be here again, the third annual Central Bank Meets Blockchain Conference. The room is full. That's pretty impressive. Because last year, of course, we had a keynote speaker who was recently elected, Prime Minister of Barbados. Of course, the room is going to be full for that. I'm mindful as I stand up here with some pleasure that the fate can be both generous and pretty fickle. You know, this hurricane season, we had a tropical storm come by. It was very generous to us here in Barbados, but it was very, very spiteful to the Bahamas. And I just wanted to take one moment. We have Derek Roll here, a deputy governor of the Central Bank of the Bahamas. I wanted just to say, for myself, but I also thank everybody in the audience, that we do stand in solidarity, that anything we can do that we haven't already done, we want to continue to do. And I fully appreciate the effort to come here at a time that there's a tremendous, I can't even find the words when I've seen the images, a tremendous shock and trauma in your homeland, that you've come here to be with us today. So thank you very much. I'm going to divide my remarks today into two. One is a review. You heard Peter and Jonathan talk a little bit about what's happened over the last year. And then I'm also going to go into a preview, what we think this means for us as a company, for the region, and indeed why we're doing what we're doing. I'm going to need my first slide to continue, I'm afraid. There we go. Thank you. If you could go to the next one. So we've got a slide here that really talks about a few things that have been notable for us in the past. The ones that are in bold are the ones I want to talk about today, because they encapsulate the progress that we've made. And the first one is the regulatory sandbox that was set up by our regulators or would-be regulators once the legislation is written, the Central Bank of Barbados and the Financial Services Commission. As a technology provider, we've always known in this space, as Jonathan Johnson sort of made clear, this is not email that you keep copies of. You're dealing with money and financial transactions. So we've always known and wanted to have the regulatory oversight of the Central Bank or the Financial Services Commission or of anyone. It was really important to us. We entered into this sandbox. Indeed, we were the first company to go into it. And it took a lot longer than we thought it would take. It took 9 months. Going through that sandbox, submitting weekly reports every day, every week for 9 months is a little bit like going to work with no clothes on. You know, at first, people are taking a good look at you. I don't want to use the expression measuring you up in this context, but you get the idea. You're a little uncomfortable. You continue doing your submissions. A few weeks down the road, you're less comfortable, you're less uncomfortable, and you're getting into it. But by the end of the process, over this 9 months, you might actually have a little bit of jauntiness in your walk as you realize you've passed all the requirements. They've looked at the directors, are they fit and proper? They've looked at the operational processes. They've had a look at the auditors who've come in to look at things like KYC, AML, CFT. And at the end of the process, you know you're as good, in some cases better, than anybody in the market, and you're ready to go out and have conversations with others who are also regulated. I'm going to tell you this little anecdote. Again, it's about not going off script, because last year I did that. At this time, I whipped out my mobile telephone, and I was exasperated because on the eve of the conference, I got this email from, I think we can just say, a leading financial institution. And it was a point-blank refusal to actually talk to us. We hadn't proposed anything. They just didn't want anything to do with us. So that was the sort of obstacle we had in our way. Now, people say lightning doesn't strike twice, but a few days ago, I got another email, also from a leading financial institution. But this one was different, because on the previous day, I'd been by their offices at the invitation of their CEO, and I'd sat in a room with all their first line, and I talked in condensed form about many of the things we're going to cover here today. What does the company do? What was the regulatory sandbox we went through like? They were taking our measure, and they wanted to know more about what we're doing and where we're going. And I left that meeting with an overwhelmingly strong sense of positivity. And the email that came the next day also reflected that. They were very positive. They wanted to talk more, and so on and so forth. Now, that change in a year is really remarkable because both emails came from the same financial institution. That's quite a turnaround. A lot of it is to do with this regulatory sandbox, but equally, a lot is to do with the project that we're doing with the Eastern Caribbean Central Bank, and I think that's the number one factor, in fact. Anybody in financial services in this neighborhood knows that we work under blisteringly, scorchingly hot, unforgiving conditions, the context that we're in. There are various problems that mean that's the case. So when you see someone doing something different, constructing an edifice, a construction that's starting to cast a cooling shadow, it's not that hard to want to step into the shadow, at least to engage in conversation. That is what's started happening, and it's a continuum. Many of you will recognize that some of our sponsors this year were the sponsors from last year. It's not these financial institutions I'm referring to, and I'm going to tie up a ribbon on that just for a moment, put it under the Christmas tree, because I think we'll get to open that in the not too distant future. But just for now, on that anecdote, I'd say thank you to the credit unions in this country and also the members of the Barbados Banking Association who've been more and more willing to speak with us in substantive terms. But like I say, it was a continuum. We have ICBL as one of our sponsors again. And this is a relationship we're looking to deepen commercially. Jeff, the CEO, just got down there, has been a strong presence in working out where can we actually collaborate. Similarly, this year we have Massey. And Massey are not just a sponsor. We are crossing the T's and dotting the I's right now on two partnerships that we're going to do with them. One, rolling out our mobile payments platform to their supermarkets starting in Coverley, and the other, leveraging as much as we can their SurePay business so that people don't have to stand in a line anymore when they want to pay bills every month. They can do it off their telephone, when they want, where they want. Now that might seem like a small thing, but it's actually a lot of utility that we're bringing to market in collaboration with these significant firms. And on the Massey front, I just thank Bruce McKenzie, who's right here. He'll be speaking later, Jeremy Nurse, Randy Banfield, Anthony Yearwood, Mark Goodrich. They're quite a set. I don't want to leave anybody out. But these are relationships that are really important to us that we have to build and collaborate around. Now, I know that Peter stood here and congratulated the sponsors and so on, and he's talked in glowing terms about Medici. There's something he didn't do, and I want to touch on that in just a moment. But I'm also going to express my thanks for the sponsors, whether it's the IDB, VOB, who've helped spread our message, Buzo, which of course is Peter's shop, and Cockspur for what is life without good food and drink. And I think on the Cockspur front, whether they were sponsoring us or not, many of my colleagues would be happy to sing their praises. But I want to make a small parenthesis here just to talk about our founders. We have three co-founders, Simon Chantry, Oliver Gale, and Gabriel Abed. Simon is here, the other two can't be with us today. Everything that we're doing, we're standing on their shoulders to some degree. They built something that we are extending, and I'm always conscious I wouldn't be here if it weren't for those three guys. And one I can thank in person, he's right there, that's Simon. Now, the part that doesn't often get said, the unheralded, is people like Peter and Johnson Johnson for Medici. Because as I find myself having to tell people from time to time, capitalism is a funny thing, it doesn't work without capital. And when you can get staunch allies like a Peter, who is a visionary investor standing in your corner, and Johnson Johnson, who's able to take a look in risk-adjusted terms at what is the payoff going to be here, and is it a noble and worthwhile cause? And they're able to avoid the short-termism that really dominates a lot of the investment market. As someone in the operations, I can't help but express gratitude for that. So I thank you profoundly, both of you. This wouldn't be happening without them. Capitalism does require capital. So this brings me to the end of the review section. There's a lot more that we could say, and I'm going to touch on the ECCB pilot in particular deeper into my remarks. That's really the cornerstone of what's going on in our world. We're a lot more than a digital wallet, but I will come on to that. I wanted to go now to a preview of where we're going and what's happening. And I'm going to start this off in a slightly unusual way. You know, this September, as with all Septembers, I have to listen in my household to, used to be a small child, 3 small children, now it's the last remaining teenager, tell me that you know, summer holidays are over, they were far too short, and you know, in any case, they were really exhausting. And I know he's setting me up for expectations on his future academic performance. And usually I kind of agree with him on the summer holidays part. They were too short, they were long, they were exhausting. But this year I had an experience in my summer holiday in the south of France that remains marked in my mind's eye. It's etched there pretty sharply. And one of the reasons it is because I saw a very strong parallel between, I'll come on to exactly what it was, and what's happening to us here in the Caribbean. A commonality in what people seek, no matter what the era, religion, culture, language that they're in. And a lot of that commonality is around removing constraints on your capacity to self-determine. So, if I press the right button now, I have not. There we go. We've got a little bit of some kind of transcription error there, but this photo on the left, this is part of a canal system in France that runs from Bordeaux, a port on the Atlantic in the west of France, all the way through to Sète, which is a port on the Mediterranean side. 17th century construction. There are about 24 towns and villages that it directly served when it was constructed. You know, places like Bordeaux, Toulouse, Carcassonne, Castelnaudary, and a bunch of others. The man on the right is the king at the time, Louis XIV. And I know all these things because I did something that normal people wouldn't normally do when they go to the south of France. You know, if someone asks you, you went to the south of France, what did you do? You don't, in your top 10 list of replies, say, I went to a canal museum. But I did do this, and I was happy I did in the end, because this canal represents, across the ages, something that everybody really wants to do, and that is control their own destiny. You know? Now, it may seem a bit of a stretch looking at the man on the right to appreciate that he could have some sort of lesson for the 21st century Caribbean, 400 years almost of difference. I mean, he's wearing a wig and makeup, for heaven's sake. You know, he's got on tights and red high heels. Now, before we judge on sartorial trends, anyone who's jumped Kadooment or Carnival is bound to have seen grown men in full body makeup, sometimes wearing a codpiece with sequins, jumping for 2 hours or more, 10 miles in the hot, scorching sun with, I've got to do some product placement, with cockspur in their hand. So don't judge too much on appearances. Instead, consider which button do I have to press here? Thank you. Consider this. In our region, we have a set of frictions around financial transactions. I've cut them into 3 buckets here, but their commonalities not just in the Caribbean, but also in other developing countries. We have a set of domestic frictions. Primarily, these revolve around very large informal sectors that are dominated by cash. Cash is an expensive way to do business. We also have a collection sometimes of electronic payment systems that sits alongside them. These tend to be siloed, fragmented, and they don't talk to one another. They're not interoperable. A level above that, you have regional frictions. In our neighborhood, we have at least 10 currency pairs in different jurisdictions that are illiquid, that nobody, no trading partner wants to really hold. So all trade actually ends up being triangulated through the US dollar. Now, this brings with it particular constraints and obstacles at many levels, policy making at the macroeconomic level, but also regionally. We've got to constantly grease the wheels of trade, the wheels of trade with the US dollar. It'd be nice if we didn't have that dependency. And above that, if we want to participate truly in international trade, we have to be on very good terms with the bankers' banks, what we call the correspondent banks. We need them, but they're often reluctant to do business with us. Now, in aggregate, these frictions really do inhibit both our capacity to trade and to realize the potential of our capacity, economic capacity. We've had them for so long, it's easy to be fatalistic and to only consider things in terms of the boundaries that they have imposed upon us. The worst of it is, I think, that it's very hard to fix any one of these without substantially fixing the other two. Otherwise, you just don't realize the overall potential that's actually sitting there. Now, let me go back to the man in a wig just for a moment. When I came out of that museum, I'd learned, I think, a pretty important lesson. There are very strong parallels between what the French faced at that time and what we face. In the 17th century, just before this canal was built, the people who Louis XIV faced to the north were the Dutch. The Dutch were riding a corporate finance revolution. They had invented equity financing, and they built the Dutch East India Company that dominated international trade. If you wanted to trade internationally, you had to be friends with the Dutch. And it struck me that that sounds an awful lot like our correspondent bank situation. You have a huge dependency just sitting to the north of you. To the south, he had the Spanish. The Spanish controlled the Strait of Gibraltar. All agricultural produce, and there was some light manufacturing in the form of silk at the time also, that sought a northern European market. A lot of it had to pass through that strait and was subject to the whims and fancies of the Spanish. You know, they had the spigot that controlled how much trade could actually go through there. And that struck me as analogous to a strong degree with our US dollar dependency for trade. Depending on the volume of dollars available, we get more or less opportunity to trade in our own region. And right above that, what I think is a parallel to the fragmented payment systems and informal economies was the fact that infrastructure in the southeast and southwest of France at the time was rudimentary at best. You had a lot of thriving towns, market towns and villages, but their horizon for trade was limited to their immediate surroundings. They just could not reach markets that were any significant distance away from them. Now, the French knew all of this, and they'd long dreamt of a canal solution that would flank the Dutch in the north, the Spanish in the south, and create an explosion of domestic trade all along this corridor of the French hexagon. The problem they faced was that the land profile they had to build on, would have to build this construction on, was shaped like a pyramid. And at the apex, there was no source of water to feed a canal system. They had to find a way to make water flow uphill if this canal was going to be built. Now, the huge advantage we have is we've got a piece of technology with us that we can pull off the shelf almost, blockchain technology, and test with it. The French didn't have that, you know, so I'm just going to leave that thread there with the French for a moment and talk about technology and testing technology. If you believe that technology can sometimes remove long-standing obstacles that hitherto have been considered structural, the only way to prove that is by testing it. And there's a cycle that echoes in history where people, they test and experiment. That leads to innovation. And the innovation sometimes, frequently, more frequently than you would imagine, leads to progress and growth. Now, what we're doing in the Eastern Caribbean is an example of that. We've got a dynamic governor, Timothy Antoine, who wants to find a way to improve the lives of the 630,000 odd citizens he's got, separated by 1,000 square miles of water. And blockchain technology is a good way to run a test to see if that's possible. I was struck by Jonathan Johnson's reference to the internet earlier. And I deliberately didn't choose that as my historical parable for a reason I'll come on to. But before 1989, the internet was really a collection of fragmented information, non-standardized, dominated by what I'm going to kindly call scientific nerds and geeks. Nobody really knew how to use it unless you were on the inside. Then in 1989, that marked a changing point because then a guy called Tim Berners-Lee created something called the World Wide Web. That did three things. It imposed a common standard across all the information on the internet, a common documentation standard. It gave all those things a unique name, and it allowed people to search by that unique name using something today we call a browser. It sounds pretty simple. Those three things, interoperability tools, they created a standard and a context, a foundation upon which others could come and build. So today we look at Google or Apple, Facebook, Amazon, Alibaba, and we take them for granted. But without that cohesion that the World Wide Web imposed, it would never have happened. Now for the ECCB and Bitt, the equivalent of that interoperability, we see that being driven by a central bank digital currency. A digital currency, if you like, that has three, like the World Wide Web, factors that can drive it. So the first is that it's regulated. The second is it's backed by real assets on the central bank's balance sheet. And the third, and perhaps most important, is that it has the power of legal tender. Legal tender means that you have to accept it in exchange and settlement for a given transaction. It doesn't matter if you have a collection of fragmented electronic payment systems, they will have to adapt to that legal tender. It doesn't matter if you have illiquid currencies in your regional situation. If you have trading partners who have adapted to that, you can create some liquidity in those markets and reduce your dependence on the US dollar. And it lays the foundation for starting to deal with the vulnerabilities that we have when we face correspondent banks. It's not a final solution, but certainly it sets up exploration of what we could do to make that much more important. You know, when I look at this slide, and I look at Dominica, Antigua, all the islands in the Eastern Caribbean, all 8 of them, and I think about that canal. I know we're not building a canal between these islands, but it's a digital canal in a way if you connect them with a central bank digital currency. And the same effects that we saw, for those who ever want to visit that canal museum in France 400 years ago, you can see and you can expect from this kind of project also. What are some of the things that we might expect? Well, I mentioned SurePay earlier. Now, this might seem like a small thing, but today, people, when they go and they pay their bills, they often stand up at a pay site for 20 minutes at least. You know, there are various studies that have gone into this, not for SurePay, but for banking. And the time you go, you spend actually fetching or delivering your money. And 20 minutes over a working lifetime is about 2 weeks. If you're spending 20 minutes to pay your bills, 20 minutes at the bank, 20 minutes at the licensing authority, the police certificate of character, and so on, and you add them all up, you start to talk about a loss of time and productivity that's very, very, very significant to an economy and also to people. I'm sure many people would rather spend their over a working lifetime 2-3 months doing something else, you know, working better, spending it with their family, what have you. It's a big problem. And this is one of the potential solutions. You tie up all these islands, you put them close together to attack it. But there are other things. In the same way that the Googles came to be, you release entrepreneurial spirit by making access to the digitally enabled economy cheaper, lowering the barriers to that. We have hardly any e-commerce in this region, partly because it's expensive, partly because the markets are very small. You come closer together, and in aggregate, the markets grow. You have a bigger marketplace to play in. This is exactly what that canal did in France. Someone down in Sète on the Mediterranean coast could now trade more easily with someone in Toulouse or Castelnaudary, much closer up to the Bordeaux side. It is the same effect that we can expect, and we've seen in financial innovations down the ages. It's not make-believe or I wish it might happen. It's something that's within grasp. We're only a few months actually away from completing this pilot project with the ECCB. And at that point, we'll start to test. That's probably the end of March, I think, when we'll start to be able to do that. And these benefits that go up and down, they attack those 3 categories that I mentioned earlier. It's not just me that thinks that we can remove that and have a massive impact. There are a bunch of other people who think that also, mainly, if someone could help me there, mainly academics, but we will be able to marry up what the academics say when the next slide does come up, you'll get a couple of quotes from notable academics. Thank you. We'll be able to marry up real data to what a lot of research suggests that we can expect. You know, for the French, that canal was a little bit like the World Wide Web and the central bank digital currency cast into one single thing. It had very, very profound, far-reaching impacts, both in terms of economics and the social contract. Many of the things that we take for granted nowadays, the participation of women in the workforce and several others, we recognize what happened in France 400 years ago as particularly modern and progressive. And I'm not the only one who thinks this. You know, we are backed by quite a bunch of research. So the French really hit it with that canal. They finished it in 1681, and it served a commercial function until 1989. And now it's mainly a tourist and leisure waterway. But that's a pretty good record. And I'd be happy to tell anyone in the margins after I finish speaking how they did it, what was the technological innovation that made them find a way to make water run uphill. But they did it, and they did it against greater odds in some regards than those that we face. We can test cheaply and fairly easily. I want to conclude just, again, go back to Bitt and its origins. It started off as a small idea. It's pivoted. It attracted a visionary investor in Peter George and a long-term institutional investor in Medici. And I think one of the lessons that we have learned over that period of time, I'm going to have to, once again, beg your forgiveness as I try to get the next slide up, if someone can help me again. But we have learned that, true to that adage you may have heard of, if you want to go fast, you go by yourself. But if you really want to go far, you have to go together. You need collaborators. And this is a lot of what we're trying to do with these kind of conferences and PR. You know, so I do hope that everybody enjoys the rest of the conference, and I thank you very much for your attention.